The worldwide demand for electric vehicles increased by 168% in the first half of this year as compared to the same period in the previous year. This kind of sales growth has piqued the interest of investors in electric vehicle companies. It's also a contributing factor to Tesla stock's meteoric climb in 2021, which further boosted investors' excitement for electric vehicles. In the last 6 months, the stock of Lucid Group has increased 165%. In only 6 months, a $10,000 investment in Lucid would have grown to more than $26,000, a return of 2.6 times the initial investment. A major concern at this point is whether the company's stock will be able to achieve comparable gains over the long run. Is Lucid a firm with the long-term potential to survive and perhaps more significantly, thrive in the electric vehicle industry? These are the questions that we will be addressing in today's video, so be sure to stick around till the end. Welcome back to New Vehicle Media, your go-to channel for EV stock. Quick reminder, subscribing's free and liking the video helps YouTube suggest similar content. Comments are loved and featured in upcoming videos. As far as electric vehicles are concerned, Tesla has dominated headlines in recent years. Then, the storyline shifts, and it is now the story of Lucid Motors. As a whole, the American automaker wants to have 3 divisions, one for electric vehicles, Lucid Motors, which would be manufacturing EVs, another for energy storage systems, which is why they're aiming to build the world's biggest energy storage system in the kingdom, and, last but not least, for technology. Initially, the Air Premium sedans were introduced, and it'll be followed by the Gravity SUV in 2023, and then the manufacturing and model options will be progressively expanded to reduce the sticker price. Customers in the home, commercial, and utility scale sectors are served by energy storage systems through supplying battery packs and battery management systems. Electric vehicle racing teams are a market that Lucid believes offers a potential for the company's battery packs and software. Additionally, there may be opportunities to sell technology to the industrial sector, with applications ranging from military, heavy equipment and agricultural, to maritime. After strengthening its balance sheet to $4.8 billion in cash in the third quarter, electric car manufacturer Lucid Group used its first earnings report to reiterate its forecast of producing 20,000 vehicles next year. Due to the company's constant performance in a meeting and exceeding its goals, the firm is well on its way to achieving its ambition of manufacturing 20,000 sedans by 2022 and earning $2 billion in revenue as a result. The current limit manufacturing capacity of the Casa Grande, Arizona facility is 53,000 cars per year, with more than 17,000 of those vehicles currently ordered. Furthermore, that plant is the first electric vehicle manufacturing facility in the United States that has been constructed entirely on a blank slate. However, although Lucid and its automobiles seem to be fascinating, the same cannot be true about the company's stock value. The firm's market valuation surpasses that of Ford and is just somewhat less than that of General Motors. On the other hand, Rivian has a market value of more than $100 billion, despite the fact that the business has only produced 156 cars so far. No doubt, these valuations are extraordinarily high for any startup. But when we look at the valuations of Lucid and Rivian in comparison to Tesla, it seems that the stocks have a lot of space to grow in the future. Tesla, on the other hand, was the first firm to bring electric automobiles into the public, and it reaped the benefits of being the first. The electric car market has become much more competitive in recent years. From established automakers to electric vehicle startups, everyone is vying for a piece of the EV pie. Nevertheless, this does not imply that all of these startups will fail. Firms who are able to produce technologically superior items at competitive pricing will be more successful in the long term. Lucid seems to have struck an excellent mix between a quality product and the necessary excitement to attract prospective purchasers. It has already established itself as a desirable brand name with which consumers would want to be linked. Despite the fact that the organization still has a lot of work to do, it's certainly got off to a good start. An interesting element of Lucid Motors and its management is their determination from the beginning to compete with the Goliath electric vehicle manufacturer Tesla. Musk's business success may be attributed to its technical advantage. That's why Lucid may be the most likely candidate to become Tesla's successor, just on the basis of this factor. The search for an electric vehicle rival that might possibly steal a customer base away from the likes of Tesla has been ongoing for some time, and perhaps some investors feel Lucid has what it takes to be that contender. Unlike NIO or Rivian, the luxury automaker has maintained its commitment to its timeline. The firm met or exceeded its manufacturing and shipping goals. For the time being, there are reasons to assume that it will be able to meet its 2022 targets and, after that, increase production while maintaining a gross margin of above 20%, roughly equivalent to Tesla. In the end, money will not be the determining factor in finding out who will be successful in the long term. This is entirely a competition in terms of technology and manufacturing. The vast majority of new businesses have the ability to obtain whatever amount of capital they need to get up and running. The firm that would really triumph is the one that has the most advanced technology. And for now, it looks like Lucid is in the lead. It's just a matter of time when the competition catches up. There are a lot of companies out there, and they're all vying for that technical advantage. Thus, the second aspect of success is critical. The ability of a company to scale up its manufacturing will be the second most important differentiator between it and its competitors. So far, none of the new startups has had any success in this area. Having said that, Lucid, Rivian, and NIO are still some years away from being viewed as potential successors to Elon Musk's Tesla. Even yet, it's too early to guess on where Lucid or Rivian or any EV startup will be in 1, 3, or 5 years. While the EV business is still young, a lot may change over the next 5 to 10 years as major firms such as General Motors, Ford, and others move to remain competitive, perhaps acquiring EV startups such as Lucid. The most effective strategy for the majority of investors is probably to purchase a portfolio of various EV equities. It's a fantastic strategy to protect yourself against large losses in the event of a single company's failure, while simultaneously giving yourself the opportunity for an investment to grow tremendously. I'm interested in learning more about your investment plan. What characteristics do you look for in a firm to determine whether or not it's the best fit for your portfolio? Furthermore, does Lucid meet the requirements to be included in your portfolio? Let us know by leaving a comment below. Because the ultra-luxury sector is so limited, Joe Do estimates that Lucid can sell around 20,000 vehicles to these consumers every year. If they want to sell 500,000 cars a year, it has to lower the price, which means lower range and entry-level luxury, like the less expensive version that starts around $77,000, so the only advantage over Tesla being more luxurious is lost. That might be true, but it doesn't seem as if the luxury car maker has given up on the quality of its entry-level cars just yet, and not to mention, even in the entry level it will have superior range over any other branded EV. That should wrap things up for today. Keep in mind that subscribing's still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.